Hello, and welcome to Stock Market Fever. Today is Thursday, April 28th, and there was a big bounce back in the market today as the Dow roared up over 600 points in today's session, and with the S&P 500 also up over 100 points. Lots of eyes in the last few weeks were focused on Apple, as tech stocks have been hammered this year, particularly with regards to Meta Inc., more commonly called Facebook, falling like a rock from 380 all the way down to 185 after reporting disappointing earnings and slower growth. Netflix had also been savagely beaten down upon projecting a loss of 2 million subscribers in the coming quarter. And even stocks that reported great earnings, such as Tesla, were not rewarded. So, in this context, investors held their breath, waiting for Apple to report after the close. And report they did. Leading up to the close, in anticipation of a good earnings report and announcement of a new share buyback plan, Apple was up over $7 for the session for a 4.5% one-day gain to close just over 163. And then the earnings report came out, and Apple's earnings did not disappoint. In fact, Apple reported a March quarter revenue record of $97.3 billion, up 9% year over year, and quarterly earnings per diluted share of $1.52. Apple CEO Tim Cook boasted, "This quarter's record results are a testament to Apple's relentless focus on innovation and our ability to create the best products and services in the world." And Apple's CFO Luca Maestri added, "We are very pleased with our record business results for the March quarter, as we set an all-time revenue record for services and March quarter revenue records for iPhone, Mac, and Wearables, home and accessories. Continued strong customer demand for our products help us achieve an all-time high for our installed base of active devices." In the earnings call today, in light of these glowing results, Apple showed much munificence to their shareholders by increasing their dividend by 5% and authorizing an increase of $90 billion to the existing share repurchase program. And in the aftermath of this glowing financial result, one would expect Apple share prices to soar after the close. However, not everything was so rosy in the call, as the company forecast both production problems and sales problems in China as a result of their continued draconian lockdown policies in the face of COVID. Apple CFO Maestri warned that supply chain issues would hurt sales in the next quarter by $4 to $8 billion, substantially larger than the hit in the second quarter. He also indicated that COVID shutdowns in China were also hurting demand for Apple products. And, according to Reuters, many analysts are still concerned about demand for Apple's products going forward. And how did the market react after the announcement? The initial reaction was not positive at all. Although there was no further surge in price shares in the aftermath of record revenues, there was no major decline after the negative guidance in sales. The bid on Apple fell from its close of $163.64 by about $3.50, not a big decline, but still not an advance into positive territory, which is what you'd hope after they're posting such strong numbers. And while we at Stock Market Fever do not offer investment advice, we are still overall bullish on Apple. We believe that production and demand problems related to China are temporary. We believe that demand for Apple products will remain strong and that their recurring revenue services will continue to grow and that management will continue to develop new innovations that will change the way we work, live, and play, and that the company's fortunes will continue to move forward and shareholders will be amply rewarded. But what do you think? Where do you think Apple is headed? Would you rate Apple a buy, sell, or hold? Please leave your thoughts and comments below, as we'd love to hear from you. And be sure to like and subscribe for future actionable stock market news and alerts right here at Stock Market Fever.